So for the longest time, I've been putting off renovating my house. You know how it gets, life gets busy, and even though I walk past the outdated bathroom every day, I kept saying someday. But then one day I was like, okay, enough is enough. I started getting estimates for some of the updates I wanted, new floors, a modern shower, maybe even open up the kitchen a bit. And woo, that stuff adds up quick. At first, I actually thought about selling. I figured maybe I just move into something that already had the updates that I wanted. But then reality hit. I love my neighborhood. I'm close to everything I need. I know my neighbors, and I've got a good setup here. And the bigger issue, my mortgage rate is 3.8%. Like, I am not about to give that up for a 6.4% rate. That's just not happening. It felt like I'd be starting over financially, and honestly, it did not make sense. That's when my sister-in-law told me about home equity loans. I heard of them before, but I've always thought they were kind of complicated or risky. But she used one of them for her own home upgrades and had a good experience, so I figured, all right, maybe I should at least look into it. I ended up doing some research and found this comparison tool. And I gotta say, that made a huge difference. Instead of guessing or calling around to different lenders, I could see a bunch of options side by side. Some had better interest rates and others had lower fees, and a few even had no origination costs, which I didn't even know was a thing. I spent maybe 15-20 minutes going through different offers, running through the numbers, seeing what my monthly payments would look like, and just comparing the pros and cons. And I realized this could actually work for me. I wouldn't have to touch my savings or refinance my whole mortgage. I could just borrow against the equity I already built, use it to finally make the changes I wanted, and stay in the house I already love. The application itself was super simple, all online, and I had everything submitted in no time. Within a few weeks, I had the funds and started scheduling the work. So far, I've redone the bathroom, replaced all the old flooring, and I'm finally tackling the kitchen next. And the best part, it feels like I already moved into a new home without actually moving. If you've been thinking about upgrading your space or even just curious what you could qualify for, I definitely recommend checking out the comparison tool I used. It lays out everything clearly and helps you figure out what makes the most sense for you, not just what a lender is trying to sell you. It honestly gave me a ton of peace of mind knowing I was choosing the right option for my financial situation. I didn't have to compromise on my mortgage rate or sell my house. I just made my space exactly what I wanted, and it was a whole lot easier than I expected. So if you're looking to make changes to your home without the stress of moving, definitely check out the tool. It's quick, easy, and you might be surprised at what you qualify for. Today I want to talk about why use home equity loans for renovations. Many homeowners, including us, choose home equity financing for renovations for several compelling reasons. Potentially lower interest rates. Because these loans are secured by your home, they typically offer lower interest rates than unsecured financing options, like personal loans or credit cards. The national average for home equity loans is currently around 8.5% compared to 12 to 24% for personal loans and credit cards. Tax benefits. In many cases, the interest paid on home equity loans used for substantial home improvements may be tax deductible. However, always consult with a tax professional about your specific situation. Higher borrowing limits. Home equity financing usually allows you to borrow more than you could with a personal loan or credit card, which is usually useful for major renovations. Building future value. Strategic renovations can increase your home's market value, potentially creating even more equity over time. Now I want to talk about which renovations offer the best return. Not all home improvements deliver equal returns on investment. Here are some renovations that have historically provided best value. Kitchen remodels. A moderate kitchen remodel typically recoups around 70 to 80% of its costs and added home value. Bathroom updates. Adding a bathroom or updating an existing one often returns 60 to 70% of project costs. How about outdoor living spaces? Well-designed decks, patios, and landscaping can recoup 65 to 75% of their costs. Energy efficient upgrades. Modern windows, insulation, and energy efficient appliances not only save you money on utility bills, but can return 60 to 75% of their costs and home value. Finished basements. Converting unfinished spaces adds usable square footage and typically returns 65 to 75% of the investment. Remember, these are national averages. Returns vary based upon the local market, the quality of work, and the current design trends. Now I want to talk a little bit about the application process. If you're considering using home equity for renovations, here's what the process typically looks like. First, check your home equity. Most lenders require you to maintain at least 15 to 20% equity in your home after taking the loan. Use online home value estimators or consult a real estate agent to get a rough idea in your home's current market value. Shop around for rates. Just like with your original mortgage, rates and terms can vary significantly between lenders. Get quotes from at least 3 to 5 different sources, including banks, credit unions, and online lenders. Prepare your documentation. Lenders will typically want to see proof of income, tax returns, credit history, and current mortgage statements. Get an appraisal. Your lender will likely require a professional appraisal to confirm your home's current market value. And finally, close on your loan. This process is similar to closing on a mortgage, though typically with lower closing costs. Now let's talk about some potential pitfalls to avoid. While home equity loans can be excellent tools for renovations, they do come with risk. Over leveraging your home. Remember that these loans use your home as collateral. If you can't make the payments, you risk foreclosure. Over improving for your neighborhood. Be cautious about making improvements that put your home's value significantly above others in your area, as you may not recoup those costs when selling. DIY versus professional work. While DIY can save money, poor quality can actually decrease your home's value. Be honest about your skills and hire professionals for complex projects. Unexpected costs might show up. Always budget for an extra 10 to 20% for unexpected expenses, especially in older homes where opening up walls can reveal surprises. Now I want to talk a little bit about my own renovation journey. So let me share some actual numbers with you. We bought our home for $305,000 6 years ago. Over time, we paid our mortgage down to $215,000, and thankfully, our neighborhood became more desirable, pushing our home's value to $395,000. This gave us $180,000 in equity. Our lender required us to maintain 20% equity, about $79,000, which left us with approximately $101,000 available to borrow. We took out a $45,000 home equity loan at 7.2% interest for 15 years to completely transform our kitchen and main bathroom. Our monthly payment came to $412, roughly the same as a car payment, but for something that actually increases in value. Here's what surprised me the most. The renovations immediately boosted our home's appraised value by $38,000. That means we recouped about 84% of our investment right away in added home value. And the cherry on top, every morning I walk into a kitchen I absolutely love, instead of one that I absolutely tolerated. Conclusion, looking back, using our home equity was one of the smartest financial moves we made. Not only did we get the home we wanted without waiting another decade to save up, but we actually did it in a financially responsible way that actually improved our overall financial picture. One piece of advice I wish someone had given me sooner: don't wait until your home is perfect to start enjoying it. If you've been building equity for at least a few years, you might already have the resources that you need to create the space you deserve. As with any financial decision, spend time comparing options and understanding exactly what you're signing up for. Always, please consider how many additional monthly payments fit into your budget before moving forward. Check out the links below for the tools I use for competitive rates, and you too can enjoy living in your formerly 1974 home, now very 2025 home.